How difficult or how easy is it to make money in the Nairobi Securities Exchange? Now, for perspective, if you had 200,000 last year and you decided to buy Kenya Power shares, or KPLC as it's abbreviated, on NSE, you would have bought about 100,000 shares. Because at a time like this, that is December 2023, one KPLC share was going for less than 2 shillings. Now, with 200k, you will have gotten about 100,000 shares. Today, in December 2024, one share of KPLC is going for about 4 shillings and 50 cents. Now, if you had bought the shares in 2023 December and you sold them in 2024 December, you would have made 250,000 profit. That is a growth rate of 125%. Remember also, KPLC has announced a dividend of 70 cents per share for all shareholders who are on the book by December 2nd, 2024. So if you had 100,000 shares, you would have made another 70,000 in dividends. In total, you will have made a profit of 320,000 from an investment of 200,000. Now, of course, the KPLC stock is an outlier. There are many stocks that have either not grown at that rate or they have even made losses at the same time. But the question some Kenyans ask, is it possible to make money in the NSE? With that perspective, it is actually possible, but it's good to appreciate that there are many factors that could determine either growth or a loss for your investment. Here are 5 things to note when investing in the NSE. Number 1 is when you are picking a stock, check out for the dividend yield. This is the amount of money that shareholders receive as a part of the company profits. If a company has a record of paying high dividends, it could be a sign that this is a strong stock, because even if you do not make money on the share increase, you will always be getting a passive income through the dividend earnings. In 2023, some companies listed in the NSE recorded dividend yield of as high as 15%, which is higher than what you will get in a SACCO or you get in other passive income investment vehicles. Number 2 is company performance. So every company that is listed in the NSE is required by law to publish its financial results every year, and these are publicly available. You can use those statements to confirm the company performance, and this could be the profit it has made, how much of it is held up in loans, how much of it is held in liabilities, what are the revenue growth figures over the years. And if a company is slowly growing, even if it's not recording high dividend, that is one indicator of a strong stock that you should buy. Number 3 is the history of the share price, and this is where you check out what has been the trend with the share. Has it been going up even when the performance is not going up? That could be a sign of an exaggerated growth. Or maybe the share price has remained stagnant despite growth, which could be a sign of an undervalued stock, and that could be a stock that could make you money in the long run. Number 4 is industry trends. No company is 100% unique. They operate in a certain environment, and certain market forces will affect entire companies that operate in that sector. So if companies in the tech industry are making money, it is more likely that buying a stock with a company that is in the industry could make you money in the long run. However, certain industries often face turbulence which affect the entire company that operate in that sector. So even when you have a desired stock in a certain company, if it's operating in a turbulent sector, that may be an indicator of a stock to avoid. Number 5 is corporate governance, because companies are led by individuals. So some individuals by their very nature are able to turn around companies, or they're able to give high returns because of their natural talents. And maybe some companies are more diversity in the boards. Issues of fraud are likely to be less, or corporate mismanagement. That could be an indicator of researching on the leadership of the company whose stock you want to buy is highly recommended, because then you will know which companies or which leaders tend to have a record of turning around companies or have a record of positive company growth. Money254.co.ke has written more about what you need to know when investing in Nairobi Securities Exchange. Click on the link provided to learn more.